how much silver is being used by the solar panel industry. And he found that it's much more than the silver experts out there thought up to this point. So that the deficit is actually bigger than we were thinking. And I think now more than ever, we should be programmatically trading. In other words, don't let your emotions dictate what you spend money on right now, but set up a plan and just stick to that plan, and then let the world unfold the way it's going to unfold, because it's absolutely unpredictable right now. And geopolitically, we haven't even mentioned Ukraine.
In recent discussions about the silver market, financial experts are sounding the alarm over potential defaults by major silver exchanges. John Rubino, a seasoned analyst, predicts a scenario where these exchanges might opt to settle in cash rather than physical silver due to a growing deficit in the actual supply of the metal. Such an event could lead to a dramatic spike in silver prices as the market realizes the physical stocks are virtually depleted. This situation underscores the fragile underpinnings of the precious metals market and could indicate a shift towards more volatile trading conditions. Amidst this backdrop, the precious metals market has already begun to demonstrate signs of heightened volatility. Gold and silver prices recently surged only to face sharp reversals as they hit significant resistance levels. Analysts attribute these fluctuations not only to market dynamics, but also to external economic factors such as inflation, manipulation, and shifts in the stock market. A recent example occurred when misleading government data temporarily reassured markets about inflation before a deeper analysis revealed a stark reality, causing a sell-off in stocks and impacting precious metal prices. If you're into gold and silver, this video is for you. But first, subscribe, and turn on notifications so you don't miss out on the best clips of the most sought-after commodity experts. Enjoy the video.
At that point, lots of people have embedded profits, and people like big round numbers as far as setting their sell orders and buy orders and things like that. So no surprise, a lot of selling came in at 2,400. Same thing with silver at 30. That's a big resistance number there, and silver was getting perilously close to that. So I think a lot of selling came in preemptively, and that knocked precious metals back down. Now, the other reasons maybe are bigger in the scheme of things for precious metals reversing out, and that is that the stock market is tanking today. And I think that's for two reasons. One is that inflation is not going away, and people were kind of reassured by the producer price index number that came out a couple of days ago. Then they looked a little closer, and they saw that it was just the government manipulating stats again to make the election go more easily and everything. And it was what they did with the PPI was they seasonally adjusted gasoline prices way doan, or much lower. They gave gas a much smaller increase than it probably should have had, in an environment where oil prices have gone from $60-something a barrel to almost $90 a barrel just lately. That means higher gas prices, and for the government to say gas is being really well behaved is a scam. And people figured that out, and they concluded that higher inflation means higher interest rates and less chance of a cut from the Fed, and that's bad for equities, and they sold off equities. So you got the stock market tanking today and pulling everything else down. So even without gold and silver getting near resistance levels, you probably would have had them go down today just because the overall stock market is tanking. And when stocks tank across the board, they kind of throw the baby out with the bathwater. Everything falls. And we've seen that a couple of times in the last decade with precious metals, where equities bear markets included precious metals bear markets for no apparent reason other than they were just part of the global financial system. So I think the thing to look out for is what happens with equities going forward. Precious metals are in great shape, both technically and fundamentally, but they've got this equities bear market looming over them. Oh, and the other thing, of course, is that the Middle East war is broadening dramatically. And as we're speaking right now, the U.S. and Israel are awaiting Iran's response to a recent Israeli attack, and they don't know where it's going to be. They don't know who's going to get hit, whether it's just an Israeli target or a U.S. target as well, and what the U.S. is going to do. This is geopolitically terrifying. And that alone would be good for an equities bear market. So you got a lot of reasons to sell stocks right now, and all of them potentially impact gold and silver.
Now, Rubino highlights recent fluctuations in the precious metals market are highlighted, including a spike and subsequent drop in gold and silver prices. This volatility is attributed to resistance levels in pricing and broader economic factors such as stock market declines and manipulated inflation data.
Crazy. You tend to see people buying gold and silver. At the same time, we just don't know what's going to happen in the Middle East. If if Iran's attack threatens the U.S. in any way or hurts Israel in any meaningful way, and then they respond by taking out, say, an oil refiner in Iran, and that causes the oil market to spike, and maybe oil goes to $150 a barrel, and that's horrible for stocks. And if stocks tank, that might bring down precious metals, even in an environment where money is flowing into safe haven assets. So you just don't know. I think this is why you dollar cost average in precious metals or anything else you want to get into. Just don't jump in with both feet, because there's usually cross currents. There are usually good things and bad things that could happen. But if you're just programmed in to buy the same dollar amount each month, these kinds of things we're talking about are not nearly as important, because if something happens that knocks the price down of the thing you're buying, then you get more for that same number of dollars. And you can take some solace in that, and your average price improves. And so it's not that bad. And I think now more than ever, we should be programmatically trading. In other words, don't let your emotions dictate what you spend money on right now, but set up a plan and just stick to that plan, and then let the world unfold the way it's going to unfold, because it's absolutely unpredictable right now. And geopolitically, we haven't even mentioned Ukraine, where France is apparently supposedly sending soldiers to be on the ground in Ukraine, which means Russia will end up killing NATO soldiers, and then who knows what that means. And so there's a lot of things to worry about out there. And you cannot trade a market like this, because so many different things point in so many different directions. So just dollar cost average, just buy a little bit each month, and then view what's going on in the world with interest. But you won't be as financially threatened by it as you would be if you jumped in with both feet on one or another thesis here.
In the continuation of the episode, Rubino stresses the importance of adopting a cautious investment strategy in silver. He advocates for dollar cost averaging to balance out the risks posed by market and geopolitical turbulence. Additionally, he points out broader economic concerns such as the looming threat of a banking crisis and the impacts of inflation on industry consolidation. These factors suggest a complex and challenging landscape ahead for investors in the precious metals sector, necessitating a well-considered approach to both short-term trading and long-term investment strategies.
That silver is now a market that is in deficit. In other words, the world's silver mines aren't producing enough silver to satisfy the current demand of fabricators, people who use silver industrially, and investors, people who buy silver coins and bars. So what we're doing now is we're using up the available stocks of silver out there. And that's just generally, conceptually, that's a bullish thing. That means prices will go up over time to bring things back into balance. But there are reasons to think that the consequence of the silver deficit is going to be felt sooner and in a bigger way maybe than you might expect. And one is that I think it was Bix Weir who looked into the numbers on how much silver is being used by the solar panel industry, and he found that it's much more than the silver experts out there thought up to this point. So that the deficit is actually bigger than we were thinking. And then at the same time, another analyst whose name I don't remember came out with an analysis of the above ground available silver to soak up the deficit, and he said it's going to be gone in 2 years. So it could well be that we're running a bigger deficit than we thought, and the silver inventories available to cover that deficit are less available than we thought at the same time, and that brings the the crisis in the silver market, where one of the big exchanges defaults and just pays cash instead of silver, and everybody realizes it's all gone, and the price goes straight up. That was kind of out there somewhere in the indefinite future. So now maybe it's in the intermediate term future now, where we actually can put a time frame on it, that in the next few years, the dynamic in the silver market changes in a really dangerous way for people who use silver, and an exciting way for people who are stacking it right now. So who knows? But it's nice to see those numbers coming out. Oh, and one other thing that just came out that's favorable for silver is India just announced that their silver imports in the most recent February were up like 260% year over year. So that means that it's possible that demand for silver from the Asian markets, which are big buyers of silver normally, is actually higher than is being built into today's models. So put it all together, and the silver story is really exciting. So here again, I don't think you want to just mortgage the house and buy silver, but I do think that a good dollar cost averaging program that gets you a certain amount of silver, or a certain amount of dollar value of silver each month, is probably a good thing to have now if you haven't already started one.
Thanks for watching the whole episode. Now watch this one right here because it's a perfect fit for you. I see you on the other side.